Is it time for a long-term investor to invest in cryptocurrency? As a long-term investor, I see crypto fitting into the speculative portion of my portfolio. The ideal investment for someone like me is something you can buy and forget. An asset with a built-in mechanism that adjusts over time without requiring constant attention or manual intervention and adjustment. For example, when you're investing in broad market ETF like SPY, which follows S&P 500, or QQQ, which tracks Nasdaq 100, you're buying into a market cap weighted fund that rebalances quarterly. This means the winner usually takes on more weight, and the underperformer will be phased out over time. And it's a self-adjusting structure, is well suited for long-term investing. Now, with spot Bitcoin and Ethereum ETFs recently approved, it may seem appealing to just buy those. However, unlike broad market ETF, these single asset spot ETFs lack a rebalancing mechanism because there's nothing to rebalance. Each ETF only holds one type of asset. So for long-term exposure to cryptocurrency, I believe a similar structure like SPY or QQQ is essential, just like a traditional index fund, because we don't know which cryptocurrency will dominate in the future. Bitcoin may be the largest right now, but that could change. This is the Bitcoin dominance chart with ticker symbol BTC.B, shows Bitcoin's share of the total cryptocurrency market cap, essentially using Bitcoin's market cap divided by the overall crypto market cap. This chart uses monthly candlesticks and highlights Bitcoin's shift in dominance over time. So before 2018, Bitcoin held about 98% in the market. But by 2021, that dropped to around 70%. And by 2022, it hit 40% as Ethereum gained traction. But recently, Bitcoin has redominated because it's rebounded back up to about 60%. So recently, the Genius Act was signed into law on July 18th, 2025, establishing the first U.S. federal framework for payment stablecoins. Ethereum hosts nearly 50% of all stablecoins issuance, stands to benefit significantly. This regulation is likely to boost the transaction volume on Ethereum and potentially strengthen its position and further challenges Bitcoin's dominance. So for long-term investors, such uncertainty is something we aim to minimize in our portfolio through something like rebalancing mechanism. So to get that rebalancing mechanism, we need to first find a multi-asset cryptocurrency fund that are market cap weighted. And there are those type of funds existing right now, kind of work like S&P 500 and Nasdaq 100 ETFs. So the top two funds in US are BITW, the Bitwise 10 Crypto Index Fund, tracks the top 10 cryptocurrencies by market cap, rebalances monthly, and with a asset under management of $1.64 billion, currently ranking number one in terms of asset. Number two, we have GDLC, Grayscale Digital Large Cap Fund, tracks the top 5 cryptocurrency and rebalances quarterly with AUM or asset under management of $0.89 billion. So both funds are market cap weighted. Both charge a 2.5% annual management fee. Right, so first one tracks top 10 funds, and the second one tracks top 5. And they both offer diversified cryptocurrency exposure with a built-in rebalancing mechanism. However, there are drawbacks. Right, the issues with the two funds are that they are structured as trusts, not true ETFs, so they lack the creation and redemption mechanism typically found in ETFs. Those mechanisms are very important for ETF to help keep the market price aligned with the fund's net asset value or NAV. So as a result, these trusts often trade at a significant premium or discount to their NAV due to the lack of the mechanism. So this chart shows you the BITW. Blue line represents NAV. The green line is the market price. As you can see, there is a gap between the two. Sometimes it's bigger, sometimes it's smaller. It's currently trading at a discount. And for GDLC, it's the same problem, right? The light gray line is the NAV, the black line is the market price. And this disconnection between the market price and NAV is sometimes small, sometimes significant. This fluctuation and causes uncertainty, and it's not ideal for an investor. So both BITW and GDLC has applied to be converted to ETFs and were approved by SEC in July 2025. However, their conversion has been paused shortly after approval because they are multi-asset trusts holding more than just Bitcoin and Ethereum, and SEC is still finalizing listing standards for such product. I think the conversion will eventually happen, but the timeline is uncertain. Until then, they will remain trusts, and the price mismatch between market value and NAV will persist. So as a conclusion, if you are a long-term investor and you have a strong conviction to cryptocurrency and wanting to add crypto to your portfolio, I think these two trusts currently are the best available options. However, I personally prefer to wait until they are successfully converted into ETFs with proper creation and redemption mechanism in place. Once that happens, I will consider adding them to the speculative portion of my portfolio. Thank you. Please like and subscribe.